Okay, I believe that we can start now. So first, I would like to welcome you on our today's webinar. As you already know from the invitation and from the slide that you are seeing right now in front of yourselves, today we will be talking about no-code and low-code in finance and banking, with a particular focus on the loan approval process. Before we will start with the presentation, I would like to encourage you to ask us as many questions as you want. Here are two QR codes. If you will have an individual question, please use the right one. If your question is not an individual one and you're open to share it with the remaining audience, feel free to use the left QR code. I can also send the links here in the chat. Give me 1 minute. So here's the first one, and here's the second one. So the Slido is for the general discussion. If you have a question that you do not want to share with the remaining audience, feel free to use the teleform. So I believe that we can start with a short introduction of ourselves. My name is Peter Solar. I'm product owner at DecisionRules. My background is in process digitalization and REST API-driven automation. And I also have with me my colleague, Milan Havelka.
So, hello everybody. I'm senior consultant of the DecisionRules. I spent more than 17 years in a financial sector, banking or financial institutions in Europe, Asia markets, also partially in the US markets. And I spent a long time on the risk part for the approval processes, collection processes, fraud management, enterprise risk management, reporting systems, communication with the central banks, and also the management of the all processes which are behind the products on the side of the loans, also the current accounts within the banks. So that will be also our today focus. Peter?
Okay. So as Milan was mentioning, our today's focus will be the loan approval or the loan application process, and what will be our today's agenda. First, I will quickly introduce you to DecisionRules, present you our tool. Then I will also discuss with you the use cases of our financial clients. Then Milan will take over and he will shortly introduce you to the whole loan application process. And then we will move into the application itself, into DecisionRules, and present you the showcase that we have built focus on the loan application. Lastly, we will have a Q&A session with an open discussion. So first, it would be good for you to know what is DecisionRules and what you can use it for. So DecisionRules, by its definition, is a business rule management system. So a platform where your business and product teams can create their rules, edit them, and manage them without relying on the internal IT. Because that's a common problem of nowadays bank, that they are relying on hard-coded rules that can be edited only by the developers. They typically have quite a really complicated versioning and deployment. Also, the testing can be done again by the developers, and typically the time to market on all the changes are really time-consuming and heavy on the development team. On the other hand, DecisionRules is a no-code and low-code solution really focused on the business users, on the subject matter experts within the financial industry. You can deploy, for example, a new version in a matter of seconds. It has already inbuilt a simple business testing, and it brings a great agility and nimbleness into the organization. So here is a quick visual comparison of the current system in most financial companies who are relying on script-based rule engines, and how our standard decision table looks like. So we see immediately the visual difference, and that really a business person can also edit the rules, understand them, and really use them. Here is a quick example of a standard process when a financial company needs to implement a new rule. In the typical financial company using a code-based rules, first the business or the business team or the product team needs to create a business description for the development team to implement it. Then the development team needs to implement it, needs to test it, and also deploy it. And lastly, again, the business team needs to check whether the deployment and the implementation was correct. So they have to test it on their end. I think that you are already getting the idea that this is quite a cumbersome and hard and real long process. On the other hand, in a company using decision rules, the business or the product teams is the one who is handling essentially everything. They are subject matter experts, so they know the rules that they need to implement. They implement it by themselves. They also test it by themselves and deploy it by themselves, just with a few clicks of a button. This typically results in a 3 or more reducement in the time to market of these new rules. Now, something maybe a bit more from a technical perspective about decision rules. Decision rules is a not standalone system. It always interacts and connects with your current systems, with your database, with your CRM, with your ERP, with your loan application, or with your core banking system. How does it work? You send the data from your systems using the REST API into decision rules. In the decision rules, the calculation and the decisioning is happening, and immediately you're getting back the calculated or the decided data as the REST API response. Now, something about the clients of decision rules. Currently, we are servicing more than 11,000 users on our cloud platform, and overall, we are servicing more than 180 companies all around the globe. A typical size ranges from an SMB of 50 to 100 employees up to the large corporates having up to 50,000 employees globally. As you can see from the map, our client distribution and client focus is quite distributed. We are focusing on the US market, Latin America, South Africa, UK and Europe, and India and the Asia Pacific region. The use cases of our clients, most of them are coming from the financial industry, and shortly I will tell you why. But we are also quite popular in the insurance, in the healthcare, in e-commerce, in logistics, and in telecommunication. The reason why we have so many use cases from the financial industry is because we are coming from a larger group, which is called AppTech, and which specializes in a financial and banking consultancy and software development. So that's usually one of our biggest advantages, that we are not only developing a software, but we also have the true expertise in the matter. Right now, the group has more than 100 consultants, which they are providing the business consultancy, process consultancy, and the software and development in the major European banking groups like Erste Group, Societe Generale, KBC, or former GE Bank. Now, something about our clients' use cases and typical clients from the financial industry that Decision Rules currently have. A typical client from a financial industry is a typical loan provider, a BNPL company, a bank, or a payment provider or a leasing company. Here are a few use cases that we can present to you. First, we have here an Accenture, a world-renowned consultancy company, which is using us as a part of their banking platform for their product owners and risk managers, and they are responsible for the client scoring. So they have client scoring rules inside DecisionRules, which is embedded in their banking platform. Then we have two really similar examples, the companies Stone and Teia. They are both payment and POS, so point of sale system providers. Stone is coming from Brazil, and Teia has a global presence in Asia Pacific region, in Europe and in the UK. They are both using us for scoring of their clients, and Stone is also using us for the credibility checks. Lastly, we have here a company that probably some of you will know. It's called Proopify. They are a B2B lender and a payment provider located in India. And they are using us for the entire underwriting process. So from the initial scoring of the client, then to the calculation of the limits, the interest rate of the client, and in the end, the approval of the client. A similar case is in First Response Finance, which is a loan provider, which is located in Britain. Lastly, the last example that I have here is a PayJustNow. It's a company coming from South Africa. They are focusing on payment processing and retail loans, and they are using DecisionRules for the fraud management processes. Now let's talk overall, or let's sum it up, all the use cases of DecisionRules in the financial sector. You've heard a lot of scoring. Then we are used for selection or pre-selection of the clients, calculation of the limits, calculation of the offers, for the dynamic pricing and dynamic forms, and lastly, to the validation and selection of products. And we have also quite a lot of universal use cases, for example, a client segmentation or calculation of the commissions. And now I would like to hand over my word to Milan Havelka, who will introduce you to the loan application process.
Okay, so welcome everybody once again, and let's come for the financial institutions, banking, and overall product and loan approval process. From the perspective of the environment is developing and it's changing a lot from the past years, and also for some time period that there are a lot of new players, and maybe a lot of you will be from these companies which are digitalizing the banking as such. And based on the digital banking and overall automation of the process, usually trying to fit or create a fully automated process for approval, and doesn't matter which type of the product it is, if it is loan approval process, so trying to catch up or create the best offer for the client, or if it is checking the ability to get any type of the standard products like current accounts or saving accounts. So that's a lot of type of the automation, a lot of type of the rules you have inside, and usually you are using, or if there is someone from the standard banks, you are using some systems which are pretty stable, but also pretty old, already defined, and with really small capacity to create changes, or any change will take you a long time. And let's go for the application process. So let's go for the loan approval process, which have a lot of parts, or the whole process creating you the possibility to eliminate or create the best offer for the client. This part in developing or in any type of the business changes from the past, that all of the risk managers or risk people has been ready to create the underwriting, so to say yes or no on the request. But finally, really, for any of you, I think it's familiar that the system or the overall financial sector is developing, and the risk is not creating only the underwriting or not running only the underwriting, but would like to create the offer for the client. So trying to calculate the maximum amount which you can offer to the client. And to do this calculation, you need to go through a lot of steps. First one is define the product eligibility filters. So saying what you would like to have. The eligibility filters a little bit protect you at the beginning from the costs, because some type of the calculation you will need external data. External data usually covers some costs, or you need to call some servers or something like this one. So there's another application. And at the beginning, you would like to be pretty fast to say yes or no, you are eligible or not eligible for the product for this specific type of the financing for you. So it's giving you really possibility to have a fast elimination of no-go segments like underaged. I can say also too old people to repay. For example, for the companies that the structure of the company is not in line what you expect, or you have already data what you would like to have. So maybe some product parameters, maybe some regulation. And also a lot of you will apply the calm down period. So if there has been already loan approved and disbursed in some time period, you would like to limit the other loans for some time period. So that's the creating the filters at the beginning to have really fast response at the first request of the client. Afterwards, you are enhancing the data and preparing the scoring and filters from the point of view of the scoring of the client. And there is another dimension that usually companies which are long-term on the market have the multiple scoring modules, multiple type of the scoring per one client based on the different type of the products. And it's not good. The new systems will help you a lot to create the one client scoring models, to have also their multiple ways how to calculate with all part of the model, or only with some part, because if you have a new client, the new client will have a different type of the data than the existing client, that you can use a much more information and calculate much more precise information about the scoring of the client. So you can set up the different scoring strategies in flexible modules. You can define also the different type of the approaches. There is new wave of the XG boosts and boosting calculation of the models. It gives you opportunity to have the better performance of the models. Sometimes it's not perfect solution because the explanation of the model is much more complicated, but also for such new approaches, new models, you are able to put the rules and create a calculation inside of the system. And the key thing for the scoring models is usually that you are developing the scorecard for some time. So you need the data, that's the one thing. You need to have the proper calculation. And finally, you need to put it in the production as fast as possible, because the scorecard is getting old each day. So finally, simple way how to put it on the production is the key for your performance, for your best results from what you developed for in some time. And again, you need the system, you need to have the possibility not to implement it 3 months. From my experience, the 3 months has been something like minimum to implement the scorecard in the system. Using the flexible or cloud systems like this one, you are able to put it on the production in a week. If you have everything ready, you can put it on the production immediately without any need. And you don't need IT support to do this. Also, afterwards, you are implementing the scorecard, you need to have the A/B testing, or you would like to compare the results from the scorecard. So run the calculation, get back the information, and have a comparison in BI tools or different type of the tools what you are using. Again, capable, useful in the system. And also, you should have the proper default calculation, default set for the risk-based pricing and for the decisioning. So finally, you need this calculation for the next rules or for the next steps in the process. Based on the calculated score for the client, you can start to define the pricing. And the pricing, again, a lot of companies have the flat pricing, but the small change of the pricing connected to the risk, it creates a lot of potential on the market for you. If you are not thinking only like the risk manager, but also someone who is the team player for the whole process, and that's what is needed or what is requested from these persons, is that you are trying to get the better price for the better clients, to achieve the better population, and to avoid incoming population to be worse than you expect. So finally, you are going to calculate the best way. What is the expected default of the client, to put it into the pricing and to run the pricing in line with the expected problems of the client. And also, from the product perspective, you are usually having the profit metrics, which is saying you what will be the profit by the client or by the portfolio, and helps you to set up the proper pricing per term, per the default expected, per other type of the requests on the pricing. So usually it's used by the profitability metrics and calculation of the pricing scores to have the final percentage of the interest rate or APR. So this is giving you again change to have it in one system, to have it straightforward, to have it as the individual rule, so you can use it in the whole process or separately for any other processes to be connected in the system. So that's the definition of the client pricing strategy. So you are able to set up the strategy specific for the client's portfolios and so on. Once you have also the pricing calculated, you should run through your policies. So look for the shadow zones. If you have some part of the portfolio and you would like to test it, if it is still capable to be approved, you can predefine all your rules, what you already did, so all your information, what you have automated, what you have in system, and prepare it for the manual approver as the list, what are the exceptions and what should be mentioned by the manual approver. Running the A/B testing, it's need of any type of the changes in the approval strategies. So you can define per parameter, per attribute, per scoring, per anything, the testing modules. So you can separate the parts of your portfolios, and finally review and test what are the comparison values for the one type of portfolio and second type, how differs, and what is the results of the strategy. Creating creating the proper product offers and also the profit from your side is need today, that the client is not coming only for one product. Usually you would like to see the full offer. So once the client is coming with the request, I would like to have the loan for maybe 1,000 euro, and you are running the strategy and only saying yes, you will get it or not, you will not succeed on the market. Nowadays, you should calculate, yes, your capacity is maybe 2,500, and you can get these type of the products, you can get these terms of the products, you can get these pricing for these different terms, which fits your needs, and offer him the proper loan that he can choose or she can choose. That's the today strategies, and usually old system are not such flexible or too flexible to do this way. You will spend years of the development that you will have again fixed system without the possibility to flexible implement any change you will need. So these days the rule engines are playing the key roles on the side of the decision. Once you have defined if the client will go manually or you have really offer, you are starting the affordability check. And the affordability check is the final part, usually really strongly regulated market by market. So your regulator is saying how far you can go with the level of the debt to sales ratio or debt to income ratios, which creates the final payment schedule for the client. So you will be there with the calculation, or you can flexibly change the models specifically for the affordability. In the strongly regulated environments, it's critical to have the models behind the affordability, that you have good position on the market and you have really step in front of the others, that your calculations is much more proper, and also it keeps you safe from the potential risks and losses. And also you can strongly show what are the source calculations, what are the data for the calculation of the income, because you don't need to have the income stated from the client. You can collect it from the different sources and finally compare it within the calculations. So even really heavy calculation can be done by the decision tools. So that's in the box how it looked like. And now we can look how it can be handled. I strongly need to say can be handled, because there is too many ways in our system how to do it. This one is only one type of the showcase of the implementation of decisioning. So I will step into the application. And I think you haven't seen yet the application. So starting from the once you create your account, and you can create immediately after the call, after the webinar, your accounts and start to play with the application. You can create account. You will come to the dashboard, which is showing you how many rules you have, how many API calls you have done, what is your plan, and some high-level information, and also the log of all the changes. Log of all the changes, and also the another logs. It's really critical for the auditing paths. Anytime for any type of the regulation, you have there all changes, all information about the past, how it happened. And also there is a strong versioning, so you can go back for some version what you used in a time of the previous approval or on the approval in a time of the loan application. Then we are using the folder structure, so your rule can be strongly organized in the folders. And I have there the one chain of the rule, which is combination of maybe 20 or 20 up to 30 rules, which are connected one to each other, and each of them have its own purpose. And I am starting with the most complicated one, which is the rule flow. And the rule flow creates the connection between the rules, and all of these rules is in the structure we've seen before in the presentation. So the eligibility, filters, scoring, pricing, policies, affordability, and final decision. So one by one, it creates you the whole calculation. You can use the request, so you are sending the request REST API requests into the application, and you can use the full rule flow, or you can use each box, so you can use only eligibility request, or you can call only the scoring request for your results. And also you can combine these boxes. You can say, I would like to have only part of them evaluated now. For example, for the pre-scoring, you will not have all the inputs and you would like to call only part of the rules. So you will define, I'm calling only part of the rules, or inside of the system, you can define the part, which part will be called in this proper case. And I have there prepared JSON. So we are working with the JSON input. The input have the parts of the form data. So I will go simply there for the input output model, information on the data which are stated on the form, data which are enhanced from the internal systems like the current account or what you are using. If you are a financial institution, you will have information about the loans, maybe about the credit cards, not about the current account. Also enhancing by the external data, it can be any type of the bureau. So you can have a credit bureau, but you can have also any other bureaus or any other information from the telco, from energy companies about the payments. So any information from the external data. And also finally the request of the client. So your form at the beginning doesn't need to have the request at the beginning. It can be somewhere in the end, or you can collect only part of data in a whole process and enhancing the information and calculation for the client. On the result side, it's the information about what has been decided and the parameters for the decision. So I prepared some data there and I can run it. Sorry, I already have the result run even before. So I have the information from form about this is the entrepreneur, so about the business name, about the owner, about the balance sheet, profit loss, and some internet data about the account and a balance on the data, about the credit card and balance on the credit card account, information from the external credit bureaus, so financial subjects, loan amount in a bureau, and also the request of the client. And finally, on my result will give me the response on the product. So decided amount, I decided there that I will not give to the client any amount because his income is not coming in the same way as the request. And also the parameters for the structure for the manual authority. So I have also there the request about the manual authority because the client is under 25 and I would like to have it in the manual checks and so on. So now I will go step by step to see how it works. And if we go to the eligibility filter, and the structure here is designed by the folders. So my eligibility rule is the calling of the, again, rule flow. And this rule flow is calculating my eligibility rules. And my eligibility rules I have defined in my setup, that I am defining the strategies for the eligibility, and I have there 3 rules about the business age, number of executives, and the business legal form. I can add there other rows with the calculation, and the calculation is finally set up in the rule. And the rule is pretty simple, that I'm just for the business, for the age of the business, comparing actual date with these business start dates, which is coming on my form. And if it's true, I'm saying that's okay, and I evaluate the rule. If it is not, it's not okay. I'm saying that the startup is under 1 year, so that the company do not have enough history, and also saying the internal and external message. So internally, for the underwriting, I'm saying him that it's startup. For the external, I'm saying that the business is short time. If I look, for example, for the number of executives, it's pretty simple, that comparing from the input number of executives, if it is in line, again, not giving there the response. If it is not, saying that there's too many executives and I am not able to use it as the entrepreneur or for the strategy of the small businesses. So if I run this rule, I have on the input again my form data and internal data. On the output, I have there the internal messages, so saying that's the startup and under 1 year, too many executives, and it's not the entrepreneur. I see that on my legal form, I have a joint stock company, so if there's any other client and it's entrepreneur, it immediately disappear this non-eligibility for the client. Again, if I say there's only 1 executive, and I have there then the list of the executives, so I should take out the one of the executives and run it. Now I also disappeared with the second internal issue. Still eligibility is false, that the company started too early. It's 1 year. If I put there the start date in, for example, 2020, now I have the eligibility of the client to be able to go for the another steps and use my external data for the evaluation. You see that I am able to test it inside of the application. So if I changed immediately there any of my data, I see the results, and also I can test these definitions, which are usually pretty simple. I will need to take my data, and if I test it here, I have immediately result from the rule, and also I can look in which row it resulted. So finally, it resulted in the first one. It's true. That's this something between pink and blue. I can not pink. Something about violet and blue. I'm not able to say which color it is. So if I'm going back to 2023, and yeah, I changed different attribute. So if it is, for example, joint stock company, I will run it. You see that the second line now is underlined and saying false and giving me back the internal message, external message. And also I'm taking there the information about the strategy version. So you are already having also the information what strategy has been used. So that's the eligibility criterions. You are running here 3 rules, but it's possible to put there as many rules as you wish, as you have defined. It's pretty simple that you just create the new template, new copy of the rule, define the rule how we would like to have it, and you will add it there in the strategy selector. If you have multiple strategies for the A/B testing, you will define it in the strategy selector that there you can define the strategy version for A/B testing and what the rules you will call or what you will not call in which version. So that's the eligibility filter. Afterwards, it's going for the scoring, and the scoring should have already data enhanced. So in meanwhile, you can enhance the data by the HTTP call inside of the application. So you will enhance the data already inside of the decision rules, or you will enhance it by your system. So finally, you will get the information in the end from the first call of the decision rules that the client is eligible after the eligibility filter. And you can enhance the data and send again the same row for the scoring and final evaluation of the client. Also, after the eligibility filters, you can give some preliminary offer of the client, so it can be the second page of your loan approval process that the client do not need to fit all the information immediately in one shot. So for the scoring, as I said, for the scoring, it's possible to put there any type of the scoring modules. This one is pretty simple, that it's based on the score number points and giving me on the output score points. Probability of default not recalculated from the scoring, so it's not standardized, but still the score points, grade of the score, and the version of the scoring module. Each of the rules inside giving you the recalculation of the score. So if I go to the some of them saying that there is in default in the last 2 years, if it is true, giving the score -50, if it is false, giving 10, or if it is not calculated, giving the -50. Each of them calculates the score. Also, at the beginning, you are able to create any intermediary calculation. So I will need there the calculation about the profit loss to sales, so income to sales ratio. So I will calculate it before it's stepping into the income sales calculation of these score points. And finally, defining the grades based on the type of the scorecard. You are able to define A/B testing, new behavior client, or any type of the client, any pillar you are calculating. You can define the grading one by one. And finally, based on your type of the client. So my client, I think, is existing. I will see it pretty simple. That yes, that's the existing client. And if I change it, external data, no, internal data, client. So it's not the client. So I am using now the different grading and different scorecards. So my score version is for the new clients and giving me the grade based on the different setup of the grades. So again, you have a full flexibility how to design the scoring. You can put there any type of the calculation. You can create it visually, like this one that you have per each attribute the independent calculation, or you can have the full calculation in one shot, and finally sum it up in the array and get the same result. So its design is pretty flexible, and finally open for all possibilities, A/B testing, a lot of type of the scoring. Also, it can be called separately. So you see that there is a endpoint to be called. You will get the result about the score without any other part of the process. So each of the rule has its own endpoint. So if you would like to get the only grading part and you have it calculated, so simply you will send it for this rule. The endpoint is alias or the rule ID, depends what is much more feasible. Usually alias is much more feasible for your system because it's you are able to remember what you put there because you can edit, or you can use the rule ID, which is generated ID, unique for the rule. So then you have the score calculated, and after the score calculation, you are able to do the pricing or to calculate the pricing. Your input for the pricing is already calculated, the score and the request of the client that you will need it for the metrics. And again, it's about the calculation in the rule flow, giving me on the request the score and the client request, and back the grade of the pricing, interest rate, and type of the pricing of which I used. Simply there is the pricing metrics, which is giving the grades based on the scoring. Doesn't matter if it is scoring of behavior or existing or new client, and the term. And usually it's the sorry for that. It's the creation of the combination of the interest rates based on growing of term, that you have better interest rates because it's paid longer time and giving you the better profit in a time. But in combination of the quality of the client, you are able also not to offer some of them. For example, that pretty good client doesn't have the reason to get the pricing for the short time because he hasn't money for the short time, and such interest rate will not be competitive for your internal processes, so it will not give you enough profit, so you will not finally offer to the client even such offer which can be done for such client, but finally you don't want it because of the profitability of the client. So that's the pricing based on the metrics. And once you have calculated also the pricing, so you know that there are any possibility to price the client, you're running the policies. Policies usually defined, as I said before, if the final process can be decided automatically or manually, and also applying the shadow zones, what you would like to check, or creating also other checks, for example, fraud checks or any type of the checks which you would like to go through such client because there is something what you need to cross-check twice. In this case, I have there again define the rules for the client. This is a little bit different than the eligibility, that it shows you two types how to do it. This is more simple way how to do it, that each rule have its own row. So saying that there is a 25-year younger people, I would like to see him manually. There is the 3-year less on the business. So eligibility has been 1 year. For the manual approval, it's 1 to 2 to 3 years. So anything below the 3 years will go manually. Negative EBITDA in the last years, and so on and so on. So I can add there as many rules as I wish. Such simple. I don't need to create a full rule. I don't need to create the link between the rule and the request. Simply like this one. And I have my evaluation finally in the previous policy results. So if I look for my client where is birth date 2000 and saying should be more than 25 years, I will need somebody to help for such calculation, but not 18, it will be too old. Maybe 70. Now you see that the calculation done the work, and one of the rule disappeared. Again, years of business, we play a little bit even before. So if it is 10, for example, again, and internal loans over the limit. So I can change their internal loans, internal data, account balance. There's only credit card, I think. Yeah, there should be some calculation loan amount. Yeah, this one. And I have done my work. So finally, if I have there 180, and I can also change the rule. So loan limit is 100. Let's say it will be for us correct for 300. I just change there for the 300, save it, and run the rule. And again, there is now no problem because my loan, total loan amount internally is 180, and I put it somewhere in 300. So put there 310. I have my loans back. So such simple is how you do the changes, and also you can do the variation for the A/B testing. So you can do the different setup for test A and test B. Finally, affordability. Affordability is usually one of the most complicated calculation because it gives you the benefit to play what you will offer to the client, how big offer to the client will be. So the calculation of the income, some estimation of the income can be done multiple ways. Again, this calculation you can define 3, 4, 5 ways. It can come from the current account, it can come from the form, it can come from the external bureaus, you can calculate it from the payment of the energies, you can get it from the telco companies which have the same estimation. Put there all of them inside of the system and decide which will be for you the best way to select, or which will be for you to have the real final value of the estimated income. So that's the calculation of the income. Again, gives you there the definition of which type of the income will be used. I used there the decision tree, and also the definition of the maximums of the debt to income ratio. So finally, how big loan I will offer to the client. And finally, the result is going through the main decision, which is giving you if there is any offer for the client. So finally, simple decision tree in the main setup, which is saying if there's any offer and any amount you can approve. If there is less amount than the request, it's deconditionally approved. If I have any manual authority, I will get the manual reevaluation of the client. If there is not enough amount or if it's not eligible client, I decline. And any type of the decision which is not able to evaluate will go for the manual evaluation, because there can be some lack of the definition inside of the process. So finally, overall, it gives you the full process of the evaluation. You will get the amount for the client, you will get the decided term, you will get the decided interest rate, the decision. So that's the result of the request. Also result parameters for the manual approver. So you can put on the screen for the manual approver why it is coming to him, her, what should be evaluated, and also the decision for the client, why she is not eligible for the evaluation. For sure, the version, so you know how you did the decision, version of the scorecard, version of the pricing, version of the champion challenger. So what type of the decision you have done. Good. And I will run maybe one more decision that we will see also approve, which is the happy end, I think, for any approval. So finally, if I put there these inputs, where is enough income, I have there the amount, term, interest rate, and approval. Also, I can put there for the final product guys or sales guys the metrics of the terms, interest rates, and amounts, that they are able to choose the product, they are able to select the product for the client. And that's pretty it. It showcases the flexibility of the system. That's only one way how to define it, how to put it together, how to have the full process. But also it gives you the flexibility to set up anything what you wish in the system. Good, Peter. Do we have any questions? Do we have anything to discuss in the Q&A?
Yes, we do. So with one question as what type of input files does your tool accept? Does it have the ability to extract the data from PDF files? And if it does support any integration with open source languages? So I will take the first part of the question. What type of input files does our tool accept? The simple answer is JSONs. So only JSON. So typically when you are making the REST API call, the whole body is in JSON. The second question, does our tool have the ability to extract data from PDF files? Not directly, but luckily we have technological partners. I can mention a company called TCG Process, and they have the OCR in their tool, so they are entire workflow manager. So yes, if someone would be interested in having connected the OCR with the decision rules functionality, please reach out to me. I can actually type later on my email in here, and we will gladly do a demo for you. And there is another part. If our tool does support any integration with open source languages, maybe if the Anonymous is here, can you please elaborate on that question? Actually, yeah, you can turn on your mic if you're here. or you can type it in the chat. Yeah, if not, regarding the open source languages, you can use JavaScript in Decision Rules, and we also have an APKs for, yeah, I believe all the pretty standard languages that are used within the industry. So that was one question, and yeah, that's all for now. So yeah, if anyone here from the audience has any question about Decision Rules, yeah, feel free to turn on your mic and yeah, speak out and ask this question. Or you can type it in a chat. That's also possible. Okay.
Okay, so thank you very much for today's session. Thank you, you are joining us. We are ready to help you anyway. If you have any question, you can contact us, and we will try to set up with you the process, help you with the POC, and start the process. Doesn't need to be only the financial process, not only the loan approval process. As you've seen, it's pretty flexible that you are able to do there any automation of the results.
Thank you so much for the attention. Wish you a great day, and looking forward to seeing you at some of our additional session or on the private demo. Have a great day. Bye, guys.
Bye-bye.